priced or overpriced based on holistic multi-factor modeling. Investment Research Report, Vertiv Holdings Company, VRT. Date of analysis, January 6, 2026 current price, $173.95 52-week range, $53.60 to $202.45. Step 1. Financial Fundamentals, Intrinsic Value Analysis. Vertiv continues to be a primary beneficiary of the AI-driven data center infrastructure boom. Valuation multiples. Market cap is approximately $67.14 billion. Trailing P/E is 66.27x, while forward P/E is significantly lower at 33.11x, reflecting high growth expectations. P/S is 7.05x and EV/EBITDA is 37.69x. Growth and margins. Revenue grew 28.76% in Q3 2025. TTM revenue stands at $9.70 billion, while operating margins reached 34.13% in FY 2024. They dipped to 17.6% in Q3 2025 due to rapid scaling and inventory management challenges. Financial health. Debt to equity is approximately 83.2%, a massive reduction from 612% 5 years ago. Current ratio is a healthy 1.83x. Free cash flow, TTM, is strong at $1.37 billion. ROE is exceptional at 55.02%. DCF analysis. Using a WACC of 10.5% and a terminal growth rate of 3.5%, assuming 20 to 25% revenue growth in the near term, the estimated intrinsic value is $191.40. Output. Intrinsic value, $191.40. Margin of safety, 10.03%. Step 2. Technical indicators, market momentum. Moving averages. The stock recently tested its 50-day SMA, $174.75, and 200-day SMA, $132.53. A recent bounce from December lows suggests strong support. Oscillators. RSI is currently 63.6, neutral bullish. MACD is positive at 1.85, giving a buy signal. Trend. Despite high volatility, 48 moves greater than 5% in the last year. The long-term trend remains upward. Strong support is at $160, with resistance at the $200 psychological level. Verdict. Momentum supports the intrinsic value thesis, as the stock has recovered from a mid-December rotation. Step 3. Institutional and insider activity. Insider activity. Net sellers over the last 90 days, with roughly $937.8 thousand in sales, most recently by Stephen Leong. No insider buys were recorded in this period. Management competency. Management has successfully pivoted the company toward liquid cooling and high-density power solutions to meet AI demand. Their ability to reduce debt from 612% to 83% equity while maintaining an ROE of 55% demonstrates elite operational efficiency. Institutional holdings. Institutions own 81.3% of the company. Major holders include Vanguard and BlackRock. Recent filings show continued accumulation, with 2,141 institutional owners reported. Step 4. Sector and macro comparison. Peer valuation. VRT trades at a premium, P/E 66.27x, compared to the U.S. electrical industry, 30.5x, and GE Vernova. However, its P/G ratio of 0.90 is superior to the industry average of 1.82, indicating it is cheaper relative to its growth. Macro environment. Higher interest rates generally hurt capital-intensive industries, but the AI arms race has made data center infrastructure a mandatory spend for tech giants, hyperscalers. Potential S&P 500 inclusion in Q1 2026 serves as a major liquidity catalyst. Step 5. AI sentiment and narrative analysis. Narrative. Dominant themes include AI liquid cooling play, and hyperscale expansion. Vertiv is often cited as the picks and shovels of the AI boom. Sentiment score, plus 0.75, bullish. Recent upgrades by Barclays to $200 and Goldman Sachs have solidified a bullish outlook following a year-end dip. Alignment. Sentiment aligns with the strong revenue growth and FCF fundamentals. Step 6. Composite scoring. Factor. Weight. Score 0-100. Weighted score. Fundamentals. 40%. 85. 34.0. Technicals. 20%. 72. 14.4. Institutional/insider. 10%. 60. 6.0. Sector/diagonal macro. 15%. 88. 13.2. Sentiment/narrative. 15%. 90. 13.5. Total score. 100%. 81.1. Export to sheets. Step 7. Conclusion. Classification. Undervalued/potential by opportunity. Score. 81.1. Company summary and investment research. 1,000 words. Vertiv Holdings Company, VRT, has transitioned from a legacy industrial player into the vital cooling and power heart of the AI revolution. As of early 2026, the company stands as a dominant force in the global data center infrastructure market, specifically catering to the extreme thermal and electrical demands of AI hardware. The fundamental thesis, the financial data provided shows a company in high-growth acceleration mode. Revenue growth spiked to 28.76% in Q3 2025. While there are temporary concerns regarding a dip in operating margins, 17.6% versus 34% in 2024, this is largely attributed to the heavy capital expenditure required to scale liquid cooling production lines and navigate supply chain complexities. Crucially, the company's ROE of 55% and its current ratio of 1.83 suggests that management is highly efficient at deploying capital and maintains a robust balance sheet to weather any short-term macro volatility. Our DCF analysis, anchored by a 10.5% WACC, yields an intrinsic value of $191.40, which sits comfortably within the consensus analyst target of $197.36. With the stock currently trading near $174, there is a clear 10% margin of safety, making it a growth at a reasonable price GARP play when considering its 0.90 PEG ratio. Technical and institutional backdrop. Technically, the stock is currently recovering from a healthy pullback. After reaching a 52-week high of $202.45, the stock consolidated, providing an entry point near the 50-day moving average. Indicators like the MACD have flipped bullish as of early January, and the RSI has moved out of overbought territory, suggesting the froth has been cleared from the price. Institutional behavior reinforces this, as they hold over 81% of the float and have been net accumulators. While insiders have been selling, these transactions, like Stephen Liang's $937,000 sale, represent a fraction of total ownership and are consistent with standard diversification after a 3-year return exceeding 1,000%. The macro and narrative catalyst. The narrative is perhaps Vertiv's strongest asset. It is no longer viewed merely as an electrical components company, but as the provider of the radiators for the AI world. As NVIDIA and Broadcom release increasingly powerful chips, the thermal requirements for data centers are shifting from traditional air cooling to liquid cooling, a field where Vertiv is an early and aggressive mover. Furthermore, the looming potential for S&P 500 inclusion in Q1 2026 could trigger massive passive buying from index funds, providing a significant floor for the stock price. Risks to consider. Investors must monitor the hyperscaler concentration. If Microsoft, Meta, or Amazon reduce their data center capex, Vertiv's backlog could suffer. Additionally, high inventory levels, as noted in the efficiency metrics, suggest that any slowdown in demand could lead to inventory write-downs. However, given the current AI arms race trajectory, this remains a secondary risk compared to the primary growth tailwind. Final outlook Vertiv is a rare industrial stock with tech sector growth rates. Its valuation, while high on a trailing basis, is fundamentally justified by its forward earnings potential and its strategic positioning in the AI supply chain. For investors looking for exposure to the physical infrastructure of AI beyond the semiconductor makers, VRT represents a high-conviction buy with a projected upside toward the $200 plus mark by mid-2026.